You ever notice how debt feels like a heavy, stressful burden, like you're drowning? But rich people, they're using debt to buy mansions, start businesses, and grow wealth on purpose. I used to think debt was the enemy, but learning how the wealthy leverage it blew my mind. Did you know some millionaires never pay off their homes to keep their money working harder? I'm not saying go buy a Lamborghini on credit, but in this video, I'm sharing 10 real ways the rich use debt to get richer, while most of us just try to escape it. It's about thinking like the rich. Let's dive in. Number 1, they use debt to buy assets, not liabilities. Most of us were taught debt is bad, right? Pay it off as soon as possible. And that's true if you're using debt to buy stuff that loses value, like a TV or a car you can't afford, or some expensive vacation on a credit card. That's what keeps most people broke. They take loans for things that cost money every month, but don't make money. Now rich people, they flip the script. They use debt to buy assets, things that put money in their pocket. For example, instead of saving for 15 years to buy an apartment building in cash, a wealthy person might take a loan to buy it today, rent it out, and start making income immediately. Sure, they'll have debt, but the rent from tenants pays for the loan and still leaves extra money. That's smart debt. Think about this. You borrow $200,000 at 6% interest for a property, and it brings in $3,000 a month in rent. After paying the loan, you still pocket maybe $500 or $700 monthly. Over 10 years, you've built equity and cash flow, and the property probably went up in value. That's how debt becomes a wealth-building tool instead of a burden. Here's the mindset shift. Debt isn't evil. Misusing it is. When you see debt as leverage, it's like a lever that can lift something way bigger than your own strength. If you're only using your own cash, you're limited. With debt, you can move faster, scale bigger, and start earlier. So next time you hear debt, don't just think stress and struggle. Think leverage and strategy, but only if it's tied to an asset that makes money. Number 2, they use other people's money, OPM, to build wealth. This one sounds fancy, but it's basically the same principle, just taken to another level. Rich people rarely risk all their own money. They borrow from banks, investors, and sometimes even from government programs. Why? Because if you can use someone else's money to grow, you keep your own capital safe and still get the upside. Here's an example. Imagine you want to start a business. You could drain your savings and risk everything. Or you could get a business loan or bring in investors who fund it. If the business succeeds, you make a huge return. If it fails, yes, you still owe something, but you didn't lose every dollar you own. That's why entrepreneurs love OPM. It lets them take calculated risks without putting themselves in financial jail. Banks love lending to people who know how to use money. And guess what? The rich build relationships with these banks. They know how to show their low-risk borrowers. They leverage credit lines, investor funds, even bonds. It's like a rich person's secret superpower. They multiply their reach using money that isn't theirs. And here's the crazy part. Most people think this is dangerous. But for the rich, it's actually safer. Why? Because their own money stays invested in other things. They spread risk. If one deal tanks, it doesn't wipe them out. Meanwhile, the average person ties all their savings into one house or one loan and wonders why they feel stuck. Bottom line, using other people's money is how the wealthy grow faster. They're not gambling, they're playing chess while most people are still learning checkers. Number 3, they use good debt to lower their taxes. Okay, here's something that blew my mind when I first learned it. Debt can actually reduce how much tax the rich pay, like legally, completely by the book. Let's say you're a regular person working a 9 to 5. You get your salary, the government takes a fat chunk before you even see it, and whatever's left is yours. Not much you can do there. But a wealthy person, they structure their income differently, and debt plays a huge role in that. Here's how. Let's say a rich investor owns real estate. They take out a loan against the property, maybe $1 million, and use that loan to buy another building or invest in something new. Guess what? That loan isn't taxed as income. It's not earnings, it's borrowed money. So they just accessed $1 million tax-free. Now here's where it gets crazier. Any interest they pay on that loan, it's often tax deductible. That means they can write it off and pay even less in taxes. Meanwhile, most people are paying taxes on every dollar they earn and getting no deductions for their personal loan interest or credit card bills. Even in the stock market, the rich can borrow against their investments using what's called a margin loan. No selling, no taxes on capital gains, just borrowed money, tax-free, still growing. So yeah, they're not avoiding taxes illegally. They just understand the rules better. The system is built to reward people who invest, take calculated risks, and create value. Debt, when used right, is part of that formula. Number 4, they recycle debt. Instead of paying it off, they reinvent it. Here's another wild mindset shift. Rich people often don't try to kill their debt. They try to use it again and again. Imagine this. You buy a rental property using a loan. A few years later, that property has gone up in value. Now, what do most people do? They keep paying the loan down for 20 years, not the wealthy. Instead, they refinance, which means they go to the bank and say, "Hey, my property is now worth more. Can I borrow against that extra value?" The bank says, "Sure." Boom. They pull out another chunk of cash without selling the property, and they use that money to buy another rental. This is called the BRRRR method in real estate. Buy, renovate, rent, refinance, repeat. It's literally a rinse and repeat system for building a real estate empire. And it doesn't just apply to property. Businesses do it. Some people do it with stock portfolios. The rich are always looking at how they can turn one loan into something bigger, like a ladder that keeps climbing, instead of a cage they need to escape from. It's not about being debt-free. It's about being smart with debt. It's like asking, why would I pay off a cheap loan with my cash when that same cash can make me more money somewhere else? And here's the kicker. Every time they recycle debt, they still keep the asset. They're not trading ownership for freedom. They're building wealth while staying leveraged. Number 5, they use leverage to scale faster than saving could ever allow. Let's be honest, saving is slow, like really slow. You could save for 10 years just to buy one small property in cash. Meanwhile, someone else, using debt smartly, could buy 5 properties in those same 10 years and build serious wealth while you're still saving for the down payment. That's what the rich understand. Leverage speeds up the game. Imagine you have $100,000. You could use that to buy one $100,000 asset outright and be done. Or you could use that same $100,000 as down payments on 5 $200,000 properties, taking out loans for the rest. Now, instead of owning one asset, you control 5. Each one has potential for cash flow, appreciation, tax benefits, all of it. Of course, there's risk. If you don't manage the debt well, it can crash on you. But the wealthy don't just take wild risks, they calculate them. They build buffers, buy the right assets, and study the market. They play offense, not just defense. Think of it like this. Debt is a power tool. In the wrong hands, it's dangerous. But in the hands of someone who knows what they're doing, it can build empires. And here's the key. The rich don't wait until they've saved every dollar. They use good debt to move quickly when opportunity knocks. They don't just think about building wealth, they act fast and smart. Number 6, they protect their cash flow at all costs. Here's a big mindset shift that separates wealthy people from everyone else. They don't tie up their money. They protect cash flow like their life depends on it. You know how most people use extra money to pay off loans early? Like, oh, I got a bonus. Let me throw it at my car loan. Wealthy people usually don't do that. Why? Because once you use that cash to pay off a loan, it's gone. You can't invest it. You can't use it for emergencies. You can't jump on opportunities. It's locked into that loan. Wealthy people would rather keep a low-interest loan and hold on to their cash. Why? Because that gives them liquidity, the ability to move fast when a good deal shows up. Let's say a $50,000 investment pops up that could double their money. If they just dumped all their cash into paying off their mortgage, they're stuck. No play. This is how the rich think differently. Cash flow is king. They want income flowing in every month from assets, businesses, smart investments, and they want the flexibility to do more with it. Debt, when structured properly, doesn't block their cash flow. It supports it because they only use debt to buy things that generate money, not drain it. They're always running the numbers. Is this loan costing me $1,000 a month but earning me $2,000? That's a win. For them, freedom isn't about being debt-free. It's about being cash-rich and opportunity-ready. Number 7, they use strategic debt to grow businesses. Here's where the game really gets serious. While most people borrow money to consume, to buy cars, gadgets, or vacations, the wealthy borrow to create. Think about it. You start a small business, maybe selling digital products or offering a service. In the beginning, everything is funded out of your own pocket. But once the business gains traction, wealthy individuals do something different. They take on strategic debt not just to stay afloat, but to scale. Let's say the business is bringing in $1,000 a month. Most people would reinvest slowly, waiting years to grow. But someone with a wealth-building mindset might take a $10,000 business loan and use it strategically, hiring a small team, improving their marketing, or launching new products. With smart execution, that same business could be making $5,000 a month within 6 months. That's the power of leverage in business. The best part? Business debt can often be written off against income, meaning it reduces your tax liability while accelerating growth. And in business, time matters. What you do in the next 12 months can completely change your trajectory. Strategic debt allows you to move fast when it counts, rather than waiting for someday. A lot of people misunderstand this. They think taking on debt in business means you're failing. But in truth, nearly all major companies, from Apple to Amazon to Tesla, were built using borrowed money. Business debt isn't a weakness, it's a tool. The wealthy don't fear it. They understand it, plan for it, and use it to grow exponentially. Number 8, they use low-interest debt during inflation to come out ahead. This one's sneaky, but super powerful once you get it. When inflation goes up, like we've seen in recent years, most people panic. Prices go up, savings lose value, it gets harder to get by. But the rich, they love low-interest debt during inflation. Why? Because they're paying back loans in tomorrow's money while their assets and income go up in value. Here's an example. Let's say someone took a 20-year loan at 6% interest to buy a rental property. Over time, inflation pushes rents up, property values up, and the dollar down. So they're collecting more rent every year, but still paying the same loan amount in terms of dollars. That means their loan becomes cheaper over time, like time itself is helping them pay it off. It's like a secret weapon. While most people's savings are melting, the rich are using inflation to reduce the real cost of their debt, while their assets get more valuable. So if the debt is fixed and the interest is low, they don't rush to pay it off. They let inflation eat it for them. It's like watching your debt shrink slowly in the background while you're getting wealthier up front. That's why during high inflation periods, wealthy people often borrow more, not less. Not to splurge, but to buy assets that rise in value while the debt stays the same. Number 9, they use debt to diversify. Not just dump everything into one basket. Most people have this idea that if they take a loan, it has to be for one big thing, usually a house. Then all their energy, cash, and focus go into that single asset. It's like putting all your eggs in one overpriced, stress-inducing basket. The wealthy don't play that game. Instead, they use debt as a tool to spread their investments. Rather than putting $500,000 in cash into one large property, they might divide it across multiple smaller properties, a couple of businesses, or even dividend-paying stocks, using debt to balance and expand across different income streams. This approach does something powerful. It protects them. If one area underperforms, say, real estate slows down, they still have income coming in from other sources. That's diversification. And debt helps them get there faster. Think of it like building a table with multiple legs. If one leg gets wobbly, the whole thing doesn't collapse. That's the opposite of what most people do, pouring everything into a single home loan and spending 30 years trying to pay it off. Wealthy individuals also understand that not all debt is created equal. They may use short-term business debt for high-upside opportunities and long-term fixed-rate loans for stable income-generating assets. It's not reckless, it's strategic. They're always asking themselves, how can I use this debt to spread risk, not increase it? And that mindset makes all the difference. Number 10, they never let emotion control their use of debt. All right, let's end on a big truth bomb. Most people have a deep emotional reaction to debt: fear, shame, guilt, stress. And it's understandable because they've probably seen debt destroy people they know. But the wealthy, they remove emotion from the equation. They treat debt like a tool. Not good, not bad, just a tool. And that changes everything. They don't feel proud of being debt-free. They don't feel guilty for using a loan. They just ask one question: does this move make financial sense? If yes, they go for it. If no, they don't. Simple, clean, no emotional drama. This is actually one of the hardest parts to master, because we've been raised to think debt is dirty, dangerous, a mistake. And for many people, that's true, because they're not taught how to use it. But once you understand the difference between good debt, debt that makes you money, and bad debt, debt that drains you, the fear starts to fade. You stop thinking like a victim of the system and start thinking like someone who knows how to play the system, legally, smartly, confidently. At the end of the day, rich people use debt like a builder uses a hammer to build something real. The tool isn't the problem. It's how you use it that makes all the difference. All right, if your mind's spinning a little bit, that's a good thing. Because once you understand how the wealthy actually use debt, you stop feeling stuck and start seeing options. You don't have to be a millionaire to think like one. You just need the mindset and the right tools. If this video opened your eyes even a little, do me a favor. Hit that like button. Share it with someone who's still thinking debt is only a trap. And if you're into content like this, where we break down real money strategies in a way that's simple and actually useful, go ahead and subscribe. It helps this channel grow. And honestly, it tells me I'm making videos that matter to you. Because this stuff, it's not taught in school, but it should be. Thanks for hanging out, and I'll catch you in the next one. Take care and think rich.